So let's start by talking about who we are. So, what we are essentially is an independent financial consulting and education company. And we're an independent broker. We broker through a company called World Financial Group. And we're dealing in the three main areas of the industry. We're dealing with investments, we're dealing with insurance, and we're dealing with banks, especially when it comes to debt and lending products. And so here we have listed just a few of the companies that we market products for. It's probably about 80 different companies that we can market products for now, but as you can see here, there's a lot of recognizable names here. A lot of companies have been around for 100 plus years. And so we have access to all of them. So when we sit down with people, really what I do in a lot of cases is first couple of hours that I sit down with somebody, I'll just be teaching them financial concepts and strategies in these three areas. And really, what I've kind of found is that for a lot of people, they might have, one or two people that are doing investments for them. They might have another person that's doing some insurance for them. And then they also have their banker that they're dealing with. And the challenge is that, when we have certain financial goals for our future, we need all those people to be on the same page. And if people happen to be dealing with five or six different financial professionals, what do you think the chances are that they all come together, sit in one room, and talk about that client's finances and make sure that everything's working properly together? Probably not very likely, right? So, what we're able to do here is we're able to bring this all under one umbrella and look at all the different aspects of their financial world. And then what we're able to do is put together a plan for them and really help them get a very efficient strategy in place. And, when you look at all these different companies, if you were to just pick one of these out, let's say an RBC, for example, RBC is a great company. They have a lot of great products, but what do you think the chances are that they have all the best products? Probably not very likely, right? So kind of the process is that, after we're done going through some of that educational process, if people like what they're learning, we can put together a financial plan for them that's very comprehensive. And then, we come back and we give people some different ideas on how to get to where they want to go. And if they like those ideas and strategies, at that point, what we do is we go and shop the industry on their behalf and just cherry pick the best products based on what they need to get them to where they want to go. And so through this entire process, it's education and awareness, because I think for most people, if they knew everything that was available to them and everything that they could be doing, and they're aware of it, they're probably 95% of the time they're going to make the right decisions for what they want to do. Does that kind of make sense? Okay, and lastly, just touch on here, our parent company is a company by the name of Aegon, which they've been around for, probably about 160 years, I guess it is. They have billions of dollars under assets. They operate in numerous countries around the world. And so that's the company that is backing us today. So the next thing we want to spend some time on is a little bit more about what we do. So when we sit down with families, really what we're doing is we're looking at their cash flow on a monthly basis. So obviously we have a lot of living expenses that we're paying for. We've got some debt, we've got some taxes, and hopefully at the end of the month, there's a little bit of money left over to save. And so for a lot of families, what they've got going on is they've got 30 to 40% going towards debt. They've got 30 to 40% that's going up towards taxes. And so really what that means is they probably only have about 20 to 30% left over to cover their living expenses. So for the average family out there, how much money do you think they're actually able to save? Yeah, it's usually not a lot, right? And so this creates a couple of challenges because for a lot of the financial institutions out there today, if you don't have a lot of money to save, they're not going to take the time to sit down with you. For some firms, they need as much as $500,000 of investable assets before they'll even sit down with you. But there are some companies that will sit down with most of us. And usually, if there's not a bunch of money left over to save here, really where they're going to focus their time is on their living expense side. And the challenge is, I always talk about living in a place like Calgary, Alberta. We've got cold winters sometimes. So when it's minus 30 outside, we don't have the option of whether we're going to heat our home or not. That's just an expense that we have to pay. So we don't have a lot of flexibility there. So what happens a lot of times is they focus on our lifestyle choices. So You have to change the kinds of vacations you take. You can't go out for dinners as often. And one of the big things is, you can't have your daily Starbucks or Tim Hortons or what have you. And the whole idea is to free up money in this area and move this over onto the savings side. So it sounds great in theory, but realistically, how well do you think that works? It's pretty tough, right? And the other side of it is, even if I convince someone to give up their daily coffees, so let's say we save them $5 a day, maybe we can free up $100 a month. If someone puts that away for a year and they've got an extra $1,200 saved, how excited do you think they really are? Not that excited, right? So this is one of the challenges out there is if you look at the situation in Canada anyways, is that we have 91% of the population that is retiring at or below the poverty line and essentially unable to maintain the same standard of living in their retirement, and only 9% are retiring wealthy or even able to maintain the same standard of living in retirement as they had while they were working. So, do you think that the 9% are doing things a little bit differently than the 91? Most likely, right? So when you start looking, there's some pretty innovative ideas there. And so when our company started up in Canada, their whole thing was, is there a way to bring these ideas that the 9% are using and bring them to the 91? And they found absolutely that was the case. So that was kind of our focus. So when it comes back to this pie chart here is really where we start and where the wealthy do things very differently is on the debt and tax side. So we start there, and usually we can show people how to restructure things in this area. And our whole idea is to help them free up money. And if we were able to show them how to free up money in this area, do you think most people would be more open to saving? Absolutely, right? And so it's pretty common, at least in my part of the world, it's pretty common to be able to show people how to free up anywhere from $500 to $2,000 a month. Okay, so pretty significant number. And so if we kind of pick the middle there, say $1,000. So let's say somebody freed up $1,000 a month. They're putting that away now. So they have $12,000 per month saved at the end of the year instead of that 1,200 that we were talking about earlier. Are they going to be a little bit more excited, a little bit more motivated to be saving for the future? Absolutely, right? So obviously, when we free up that kind of money, it's not to increase lifestyle or go below that money. We're then going to teach them the right things to do with that money. So one thing that we look at is retirement savings. And we talk about a concept called FIN number, financial independence number, the amount of money you need to accumulate by the time you go to retire. So we help people figure out what that number is and show them strategies on how to get there so that they'll, fall into this 9% that we were talking about. We also look at children's education. That's not getting cheaper anytime soon. So we want to show people how to do that, or, they're just not going to be able to send their kids away to school. Proper protection is another big one. So, I come across young couples that have a family that they've started, and I always think, something were ever to happen to one of the main breadwinners, and they don't have that insurance in a lot of cases, is that going to put that family in a rough spot? Absolutely, right? So that's one thing we look at is making sure they have the proper protection. A lot of people think it has to cost a lot of money. It really doesn't. But the other side of it is if we're able to show them how to free up this kind of money, that makes it a lot easier as well. And the last thing is debt. For a lot of people, they just hate having debt. It's a big stressor. So what we do a lot of times is when we free up this money, we allot a portion of that to put down the remaining debt so we can get rid of that as fast as possible. Because can you imagine how it would feel if you were debt free tomorrow? It'd be a pretty good feeling, right? So we help people do that. So in a lot of cases, when we put people through this high level planning, there are a lot of fee-based planners that will charge as much as $5,000 or $6,000 just to put together the plan, and then they hand it to you and they say, okay, now you got to go figure out how to implement it. So we walk people through that entire process, and then we facilitate them getting that plan in place by helping them get the products as well. But when we look at this, if it costs $5,000 to get a plan done, how many people can afford to pay that up front, not knowing for sure if it's going to work? Not many, right? So we actually do this whole process. We do it complimentary, and the whole idea is that we're going to prove to people, we're going to put our money where our mouth is, and show them that it works. And then once we start implementing this, the other great thing is we're not going to charge them at that point either, because as we start to place products with these insurance companies, investment firms, and banks, they're the ones that are going to pay us. And that way, there's no extra money out of the pocket of the consumer in order to just get a plan in place, which I think is very, very important for people that are in this segment and trying to get to where they want to go. So that gives you a bit more of an idea about what we actually do for the consumer. Next thing I want to talk about is just how we're going about expanding our business and really why we're looking for some good people. And we are looking for people that, are business minded, have an entrepreneurial background, because anyone we bring on board with us, essentially what we're doing is we're teaching them how to start up a small business, and they're going to be an independent contractor with our firm. So I don't know, have you ever thought about going into business for yourself, or do you know people that have started a business? Great. Well, what would you say is one of the biggest current concerns, or some of the biggest concerns that people have when they start a business? Yeah, so we'll touch on a few of those today, but yeah, one of the biggest things is the investment. For a lot of people, there's a big capital risk in getting involved. I know a lot of people nowadays, they look at systems, so something like a franchise where there's a proven system in place. But nowadays, a lot of those most popular ones, it's half a million or $1 million to get in. So who is that opportunity available to? Again, it's looking at that 9% we talked about. So a lot of people will start a different kind of business, but they might be borrowing hundreds of thousands of dollars, sinking their life savings into it without really knowing if it's going to work out at all. So for us, we looked at it and says, there's a lot of good people out there that have thought about running a business or starting a business, and we thought, well, if there was a way to get them involved, it'd be a lot easier to do. So for us to bring somebody on board, it's only about $600, and that's to get some certifications put in place. And kind of the worst case scenario is if it doesn't work out, they're out about $600. As opposed to, I know when I looked at this business, I knew people in my life that had businesses. My brother ran a business where he had a shop and a fleet of trucks. My brother-in-law, he used to run an auto parts store, so he had all that inventory. A lot of family members and friends I know growing up, they have farms where they pay all this money for the land. They have tons of machinery. And I just looked at those are all fine businesses, but I just thought I didn't want to have to take that capital risk. And so something like this, it was a matter of coming in where literally our inventory is people. We just talk to people, paperwork, and that's really about it. So there's basically no risk from a monetary perspective. And when I look at that $600, I think about people going back to university to upgrade, and they're spending more than that for one course. And here we're giving people a complete financial education, so that kind of that worst case scenario is if it doesn't work out, is they learn about more about money than they probably ever have up to that point in their life. So that's a big one. Second one to talk about here is time. So for a lot of people, if they're working another career, if they want to make a business work, it usually means that they're going to quit doing what they're doing and come do this full time. And I know for a lot of people, they kind of go from having an 8-hour a day job to doing 14 hours a day trying to do a business, because now all of a sudden they're doing all of the things. They don't just have a position that they're doing, they're also the marketing person, the accounting person, all these sorts of things. And it just takes up a lot of time. So um, we looked at it and says, the way that we get paid is pretty unique. We don't get paid till we help a family. And so for people to maybe leave a job that is paying the bills to come do this, it can be pretty tough to replace their income right away, because there's a bit of that learning curve. So really what we look at doing is bringing people on board part-time, putting them into a training program, starting a twin career with us. And really what that looks like is usually about 5 to 10 hours per week. And we want them to start learning everything that they need to learn. And ultimately, our goal is to get them to a point where they could be making about $50,000 a year with us part time. And now what we do is we've put them in a position where, if they want to transition out of that other job or career, they're actually now in a position where they can do that. Okay, the next thing we look at is knowledge. And I know that for a lot of people when they start up a business, there's a lot of trial and error involved, and I guess that's part of the reason why people do look at a franchise system where everything's already figured out. Because for a lot of people, again, when you start combining these things, the capital investment and all these things, if they're trying to figure it out as they go, doing things trial and error, one of the biggest challenges is, do they run out of money before they have things figured out? And so that's why here, what we have implemented is essentially it's a mentorship program or apprenticeship training program, where what we do is we match up a senior person like myself with a junior person, and the idea behind that is they're just going to learn a lot quicker. And so any business that gets done going forward, everything is basically split 50-50. But for somebody in our training program, in the very beginning, when they don't know anything yet, it's all they're probably doing in the beginning is maybe setting up a few meetings. And then what they're going to do is they're going to sit there, watch, listen, take notes, learn how to do the business. If someone decides they want to become a client, they're going to watch as the senior person gathers the information. They're going to watch how that person puts together the financial plan. They're going to see how they present it. They're going to see how they do the paperwork and close everything. And they're still going to get half of that. And then kind of the idea is that over time, eventually we want them to be in a leadership position where now they're maybe not the ones setting up the meetings, but they're training and developing some of our new people as well. And it's just a great way to be making money while they're learning and kind of get over that knowledge gap. Because the idea is, if someone like me has been doing this for over 24 years, I learned a lot about what doesn't work. And so I can kind of share that knowledge with people where, here's what works, here what doesn't work. You can shave off a lot of time by just learning what works and what doesn't. And I just look at it and say people can really achieve what I've done in a fraction of the time, because we're going to teach them all the things that they need to know that's going to generate the success. The next thing we look at is the need, and we've kind of already touched on that. That's kind of the 91.9%, where 91% of Canadians just aren't making it come retirement time. And so I think anytime you go into business, if at the end of the day, 9 out of 10 people need some aspect of what you do, that's a really, really good starting point, as opposed to a business where, there's only a potential of 10% of the market. We kind of joke about, living on the prairies here in Canada. If you were to start up a surf shop, you're probably not going to see a lot of success because there's just no demand or need for it. But 90% of people need what we do in some aspects. So that's a really good starting point. And really the last point here in regards to the risk. So again, kind of that running off the rails, there just isn't a lot of risk here involved, because it's a small amount monetarily. It's somebody helping and guiding you. It's something people can start as a twin career. That really takes a lot of the risk out of it, because again, if they wake up 3 months down the road and decide it's really not for them, they're out very, very little money, and they're really only out a little bit of time. But the benefit that they get, as far as learning the financial concepts and strategies, is probably going to put hundreds of thousands of dollars into their future. So either way, it's going to be a great use of their time. So one of the main things we're looking at doing is growing distribution. Our goal is to continue to grow a number of offices, grow our number of agents, how many families we help, in order to grow our distribution. And one way to show how that works is through something called the cash flow quadrant. Are you familiar with that at all? Have you heard of Robert Kiyosaki, the guy that wrote Rich Dad Poor Dad? Okay, great. Well, he also wrote another book called Cash Flow Quadrant, which really just talks about the different ways that we can make money. So here in the first quadrant, the E quadrant stands for employee. And that's where most people fall into. And really in this area is you have a job, and really what you're doing is you're trading hours for dollars. And the only way that you can really make more money in this area is to either work more hours or get it so that you have a higher rate of pay per hour. And really here we don't have a lot of control. You work for a company, and they kind of decide really whether you even have a job. So a lot of people in this area, they can get pretty frustrated. And I think, again, for a lot of people, they've always thought about owning their own business. So see a lot of people at some point, they consider transitioning into the SE quadrant, which stands for self-employed. And kind of here, it's in a lot of cases, it's where somebody goes from having a job to actually owning a job. So to give you an example, I had a good friend of mine that I grew up with where when he moved back to our hometown after going away to school, he actually became an electrician and he started working for the electrician there. And small town, so there was only one guy that basically had all the business. And after a few years working for him, my friend thought, well, I can do just as good a job. And so he decided to start up his own company. And so what he quickly realized again was that had all these other things he had to do. He had payroll, accounts receivable, accounts payable, and marketing, trying to find the new jobs. And really, he went from working again probably 8 to 10 hours a day to probably working 15 to 16 hours a day. And he had just had so many more responsibilities, and it can be a really tough go. And in the end, he was actually making less money net of all expenses. And at the end of the day, he actually had to close his doors after about 3 years because he wasn't able to collect from people that weren't paying and all those headaches that go along with it. So um, it's one of those things where ideally we always think about being in business, but we don't really look at it as really just owning a job, and you have to be there every second of every day for it to work. What a lot of us are looking at doing is getting into the B quadrant or the true business owner quadrant. And even for us in our industry, in our business, we start in that self-employed quadrant. But here at World Finance Group, we actually have the ability to get into that B quadrant. And the true definition of a business is something where you could literally walk away for 2 to 3 months, maybe go on a vacation, just taking some time away or whatever, and your business continues to pay you, and it might even continue to grow at that same time. And the only really way to do that is if you have a system in place. And this is, again, why franchises are very popular because if done properly, if it's a really good franchise, there is the potential where you don't have to be there all the time. Although in a lot of franchise systems, is a lot of their employees maybe aren't reliable. They're low income earners, and sometimes they're reliable, but sometimes they're not. And what ends up happening is a lot of owners end up having to go in to cover shifts and that sort of thing. Really, what we're doing here is we're trying to build an agency system where again, we're developing independent contractors. There's huge income potential in our financial industry. So once you have people trained up and running, then the idea is that you know they're going to be there. It doesn't necessarily matter whether I'm at the office every single day, and I can still get bonus from what happens in that agency. We'll talk a little bit more about that in a minute. But the last quadrant here, the I quadrant, is the investor quadrant. And the idea here is that you have enough money invested where eventually investments actually out earn you at your job or your business or what have you. And that's really ultimately where everybody wants to get to, because then there's true freedom there and where you don't necessarily have to do anything but whatever you choose to do. So this is kind of the model for how we want to grow our distribution. So next thing we want to talk a little bit about is how our system works here. So what we've done is we've created a system in the financial industry. And if you don't know the financial industry, it's a highly regulated industry. So one of the first things that somebody has to do is go through some learning and get some government certifications put in place so that they're licensed in the industry. But from there, a person has the ability to make money either as an agent or they can also build an agency. We'll talk about both of those today. And so, if you're interested, let's talk a little bit about how the compensation works. So, um, the number one way that we can be compensated is through production. So, as an agent, if I go out there and help a family with some of these ideas that we've been talking about, and I help them get that set up, I'm going to get paid an upfront commission, which is considered to be the personal production. And to give you an idea, I know when I ask people, based on some of these ideas that you've been seeing, what do you think would be fair compensation to help a family for doing that? right? And the answers that we get vary widely. The other thing I would ask is how much do you think it would take, or how many families do you think you'd have to help to generate an extra $1,000 or $2,000 in income here? And the answer that we generally get is a lot higher than it really is. The reality is we only have to go help probably one or two families to make that kind of income here. So that really is the potential. So that's kind of the first way that we can make money through production. The second way is through training. So we talked a little bit earlier about the mentorship program. So if I'm training a new person, we're splitting those things 50-50. Again, that's another way that I can generate income through production. The second way that we can make compensation is through something called trails. So again, this is one thing that really appealed to me when I started in the industry was the idea that, you know, we can get paid that upfront commission when we help a family get set up. But the second thing is that we get paid a small percentage every year to make sure that that business stays on the books. So the idea is that I'm being compensated to go back and do reviews with clients, make sure they're on track, make some adjustments as required. And to give you an idea, is that over time, let's say we built up $10 million under our clients, what we call assets under management. And I know when I started many years ago, $10 million, it seemed like it was a lot of money. But if you really look at it today, if the average house price in a place like Calgary is about $400,000 a year, you start thinking about it that way and you kind of realize that $10 million isn't that much money anymore. So uh, what we would be compensated is about $55,000 per year to take care of those accounts. And so, really, how I looked at that was I had the ability to build up a base salary over time or create myself a pension, however you want to look at it. But that's really how you build security in our industry. The third way that we can get paid is through something called renewals. And how this works, it's actually on the insurance side of the business. Trails, that's on the investment side of the business. So they basically work the exact same way, except renewals on the insurance side, it doesn't pay quite as well. It's probably paying about a third of what trails pay. Okay, but same idea, you're building up base salary. The fourth way that we can be compensated is through bonuses. So depending on what level you are in the company, there's a wide range, but if you do a certain amount of production yourself or a certain amount of production within your agency and the people you train and develop, when you hit certain targets, you get paid an additional bonus, which we see pretty wide range, but I've seen those are anywhere from about $1,000 a month to all the way up to even $10,000 per month. And that's literally just extra. That's for doing what we're supposed to be doing already. But obviously, it's easier to hit those bonuses if we're building an agency because then it's not just us doing it on our own. And so again, that's why our compensation is really designed towards us growing this distribution that we talked about. And so number five, again, is this agency model. So really, this is where someone can get true ownership of the business. So basically, what that entails is that if I have my agency, I can train and develop as many people as I want to work out of that agency. Okay, and because I train and develop them, I'm going to get a small percentage of everything that they do, of what everybody in my agency does. So probably the closest comparison would be to how a real estate agency works. So the person that owns that real estate agency, they get a percentage of everything that flows through there. Okay. Now, the other thing that I liked about it was that a couple of different things. Number one is that if I have somebody within my agency that they would like to kind of spin out and do the same thing, I can actually have incentives to help that person do that so they can build their own agency as well. So everybody has the same opportunity here as well. Somebody isn't kind of trapped working as an employee in somebody else's agency. And kind of the last thing was that, again, when I talked earlier about relatives and friends having, these businesses with high capital risk, what this opportunity gave me was the ability that, over time, eventually, if I decide, 10, 15, 20 years from now that I don't want to do this anymore, I just want to retire, whatever my motivation is, at that point, I could actually have my agency appraised. And that will be kind of based on the revenue that it generates on a yearly basis. But based on that appraisal, I can actually sell my agency and go live my life. And so how that applies as well to additional agencies is that if somebody within my agency decides that they want to sell out, I have that option. Then if I want to, buy out their agency and get the percentages that were going to them, more of it now comes to me. I can do that. If I don't want to do it, WFG will buy that agency back from them and we just carry on and go forward. So there's a lot of flexibility with it. And it's just the ability to truly grow something that you can own and one day sell for a lot of money. You can will it down to your kids, however you want to go about it. But it was a way to build a really amazing business and build equity where I didn't have to, take out hundreds of thousands of dollars in loans. I didn't have to risk my life savings in order to do that. And that's a lot of people that don't have that capital. It's really appealing because it's all based on hard work and what a person wants to put into it. So now you get to decide how to make use of this unique opportunity that is in front of you. And obviously, it probably involves scheduling a time with us to get all your questions answered and get more information. Really, there's the client side where we provide life changing information, awareness, and planning tools. Maybe it's something that you want to take advantage of and see how it can help you. Or who do you know that needs to get the education on these very unique ideas that can make a huge difference? You may have more interest on the business side, where we learn how to run a business system that generates multiple income streams. Maybe this is what you're looking for. So these are the questions you have to ask yourself. Number one, are you happy with the path you are on? And are you open to opportunity? Number two, are you open to hearing more about how we educate families and going through that process? And number three, who do you know that would be open to a better opportunity for them and their family? So from here, it's up to you to take action. Book another time with us and we can get your questions answered and see how we can help you out.